well. But speaking about numbers, we have Relaxo Footwears as well. The first management on the show reported a soft set of fourth quarter numbers. The footwear major saw a slight decline in overall volumes, but the average realization saw an improvement. We have Mr. Ramesh Kumar Dua, who's the MD of the company, joining in. Thanks a lot, Mr. Dua, for joining in. There were signs of recovery. There were some positive signs during this quarter, even as, the overall numbers were a little soft. As we stand at the start of a new financial year, with all that you've directed towards in terms of increasing sales and the consumer sentiment, what's your outlook for FY25 in terms of performance for Relaxo Footwears?
The last year, by and large, the demand has been subdued throughout the year. It is only in the last quarter we find some uptick in the demand in rural sentiment. And keeping in view that better monsoon is expected this year, the things are going to improve. That is what we feel like.
Okay. So, Mr. Dua, just to, specifically talk about that point about improving demand in Q4, how much do you expect it to sustain in FY25? Anything that you can quantify in terms of total sales, in terms of realizations?
Yes. Mr. Dua, I think one of your headphone jacks have come off, so we'll just try and repatch that with you, the vagaries of tech as of now. But it's good to know that there are some green shoots of recovery here, because more than a fair amount of their sales come in from open footwear, which is basically entry level footwear, etc. The realizations are around 149, 150 rupees odd per piece as well, which is a lot lower than the realization at the premium end itself. So his commentary on supply and the demand sentiment would be extremely crucial, because that would give a true picture, of how demand is. The last couple of years have been rough for them. We've seen the impact of that on their stock price as well. But we'll try and repatch the connection with Mr. Dua once again. But in the meanwhile, there are some more details coming in for Varun Beverages. Margins are at around 22.5% versus 20%, Ekta.
Yes, absolutely. Doing well for Varun Beverages. The net profit has risen around 25% on a year-on-year basis as well. Well, that's on Varun Beverages. Just want to point out for the markets, like we've been pointing out, there's been a recovery which has taken place, and that seems to be sustaining as of now. I think we have Mr. Dua back with us. Mr. Dua, hi. I hope you can hear us clearly now.
Yeah.
Okay, so if you could just give us a sense in terms of what you're envisaging going into FY25 based on what you saw in Q4 in terms of a recovery in demand. Do you expect it to sustain in FY25? And if so, what would that mean in terms of numbers for you?
The demand, as I told you, is subdued, and we are expecting some better demand coming up because of better monsoon. But despite that, last year we have taken a lot of sales transformation measures, like installation of DMS2, and better latest SAP, that is S4HANA, and then a retailer's app, which has, all these things have created better connect with the retailers. And also in e-commerce, we have started selling more through our brand as seller. So where the goods are going directly to the consumer. All these things is improving our retailer inside, consumer inside, and our focus has been more on secondary sales rather than primary sales. All these initiatives which we are taking, it will have a very positive impact in this year.
So
and
can we expect
much more, irrespective whether
Right. So irrespective of what happens in the consumer sentiment, because of the things that you've done at the back end, including distributor outreach program and the kind of digital Relaxo Parivar app that you've launched as well, should bode well in terms of growth for you. Should we expect you to do at least 10% revenue growth in FY25? And if that is the target, then, how much comes in from mass segment? How much comes in from premium segment? What is the kind of margin outlook that you have for this year?
You see, double-digit growth, we also are hopeful that we'll have it. And then margin, margin always depends upon our sale. if the sale is double digit, margin also is likely to improve. Last year we had 14%, and I think this year 15 to 16% range we will be able to achieve.
Okay, so you'll be able to achieve that 15 to 16% range. Did you need to take any kind of price cuts in the previous year to probably spur up demand? And what would that strategy be going into FY25? Are you envisaging price cuts?
No, price cut we did not last year, before that. Last year, by and large, the prices were stable. And the market what we are in, we have to always keep very competitive pricing. And we are going to continue next year also. It is because of competitive pricing that we are getting inroads into the market. And the more sale we are able to achieve, more that also improves, have a positive impact on our EBITDA. So our pricing policy will remain competitive, keeping view there are a lot of local players in our market.
You've been focusing strategically on the open footwear, which is lower priced, and at the same time, you've also looked at increasing your revenue coming in from sportswear, the Sparx brand. Going forward, what will Sparx contribution be to your volumes and revenue, and the outlook on realizations?
So in the last year, our Sparx brand contribution has been 38% in the overall thing. So our focus is there on this Sparx brand, and I think things will improve. As for the premiumization is concerned, we are offering products of different segments and all kinds of whatever we are dealing, whether it is a Bahamas and Hawaii flight and also Sparx. And keeping in view our insight about the consumer needs, we are developing products and making it available at different price points. And all this thing is helping. Whatever demand is coming from those articles, we are catering to it.
Okay. All right. Mr. Dua, then just leave us with maybe a statistic to help us understand better what FY25 is looking like. The number of pairs you sold in FY24 were around 19.5 crore. How much do you think you can probably sell in FY25?
Even in the next year, this is actually FY25, our volume growth is going to be double digit because prices are by and large stable. So if we say volume growth double digit, then volume growth also has to be double digit.
All right, so double digit volume growth, close to around 22 crore pairs. And how does the BIS impact the footwear industry, and do you benefit from it, or do you have to load up on a lot more inventory?
We are already implemented in the January BIS, and all our articles what we are selling, they are ISI marked. Whatever little bit standards we have to revise or keep aligned with BIS requirement, that we have done, and as a result there has been some cost increase also which was nominal, which have also been passed down. So we have revised some of the prices, keeping in view the specs that we have to conform to as per BIS.
Okay, all right, Mr. Dua, we're going to leave it on that note. It's been a pleasure talking to you. Thanks very much for joining in and speaking to us. So that's Relaxo Footwear. They're expecting maybe some amount of improvement in demand going into FY25 and double-digit revenue as well as volume growth. Well, we need to take a short break. But